every day you get up and there's something new that's going on in the Bitcoin ecosystem to think about. And it never stops until you go to sleep. And then on the weekends, it's still happening. And some people think that's a negative, right? Some people like the idea that the stock market stops trading at 4 p.m. on Friday and it doesn't start trading until 9:30 a.m. on Monday. But I think that's a weakness of the 20th century. And I think the differentiating factor of Bitcoin for the 21st century is it never sleeps anywhere in the world. And that means there's always something to consider. And that makes it the most interesting asset in the world. And that's a competitive advantage. In the world we live in, there are hundreds of thousands of things competing for your attention. And the winner is going to be the most interesting thing.
Renowned author of Rich Dad, Poor Dad, Robert Kiyosaki, predicts that Bitcoin's value will become priceless when central bank digital currencies, CBDCs, emerge. Kiyosaki's view highlights Bitcoin's decentralized nature in contrast to CBDCs, boosting its importance in this evolving financial landscape. The financial community debates the interaction between CBDCs and cryptocurrencies, with some believing they can coexist and others thinking CBDCs might overshadow cryptocurrencies. Bitcoin, known for its independence, is not immune to external events like U.S. government shutdowns. Previous shutdowns show that Bitcoin's price can be influenced. During these events, Bitcoin's price has seen both upward and downward movements depending on factors like market sentiment and economic stability. Bitcoin has been considered a safe haven asset during crises, attracting investors seeking alternatives. The looming U.S. government shutdown raises questions about Bitcoin's price performance, with past shutdowns showing mixed results. As the U.S. government shutdown approaches, Bitcoin experiences a relief rally. Analysts believe Bitcoin could rally further if the shutdown occurs. The next 140 days leading up to Bitcoin halving are deemed crucial for dollar cost averaging, as they might present the last opportunity to accumulate Bitcoin under $20,000. Historical data suggests that this period is ideal for strategizing due to potential retracements. After halving, Bitcoin's price may rise significantly, making the current period a valuable accumulation opportunity. Bitcoin faced a sudden 90% price drop on Binance's perpetual contract, sparking confusion. Binance CEO clarified it was a graphical display issue not affecting trades or causing liquidations. Bitwise Asset Management launches Ethereum-themed ETFs, allowing investors to access Ethereum through regulated ETFs. Ethereum's low correlation with traditional markets and real-world applications make it an attractive diversification option. This launch coincides with interest in Ethereum futures ETFs, with 9 awaiting SEC accelerated approval on October 2. Bitwise expands its crypto investment offerings with these new ETFs. Let's continue our discussion with Michael Saylor.
From the years 2020 to 2024, that was the great transition of Bitcoin from being a retail asset in the crypto ecosystem, offshore, unregulated, poorly understood, the Wild West. And by the end of 2024, it will have emerged as an institutional asset in the mainstream financial ecosystems on Wall Street. Bitcoin's coming to Wall Street. And this is, it's like, I guess like college, you know. You started as a child and then you left home, and freshman year is very scary. And you've got 4 years of adjustment. And you you encounter people that are better educated than you or smarter than you, that come from parts of the world you've never been to, maybe that have more power than you. And initially it's a bit scary, but by the end of your college education, you're ready to go out in the world and compete with everybody else. And I think that coming out of 2024, Bitcoin is emerging as an institutional grade asset, and it's not going to be competing with the Bitcoin forks or other proof of work coins, or, you know, Sam Bankman-Fried's favorite yo-yo token, but it's, or, you know, apes or cats or, you know, crazy crypto things. It won't be thought of as that. It's going to be competing against owning a block of real estate in London, or owning New York, or owning a ton of gold, or owning a building, or perhaps owning $1 billion of the S&P index, or owning 1 million shares of Apple stock. And so definitely nobody thought that in 2019 or 2020. But if Bitcoin's going to grow up, right, Bitcoin's on a path to go from nothing to 500 billion to 10 trillion to 100 trillion dollars to 200 trillion. At some point, it should be 10, 20, 30% of all of the wealth in the world. If it's going to grow up like that, then it's inevitable that it had to be embraced and was going to be embraced by Wall Street. So if we consider the significance of BlackRock and the ETF, first of all, the real important point is there's broad-based consensus now that Bitcoin is an asset class. And that's a major revolution. If Fidelity and BlackRock and if 10 other ETF issuers all agree that Bitcoin is an asset class, right, it should be 10x to 100x bigger than it is right now. There's also a broad-based agreement that sometime in the next year, a spot ETF will be approved. And that's also significant. I think the third significance is this is not BlackRock taking over Bitcoin. This is Bitcoin, being embraced by BlackRock, right? This is Bitcoin being embraced by Wall Street. Now, nobody on Wall Street, none of these ETFs, none of these leaders of these money managers have said, we just heard about Bitcoin, we're here to fix it. What they've said is, we heard about Bitcoin, it seems like everybody in the world wants it. And since we offer people gold and bonds and equity and other forms of investment options, we have a vacuum and we are lacking, and we won't be complete until we're offering a Bitcoin product.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.